that I can't explain. Saint Peter never called my name at all. For some reason that I can't explain, Saint Peter never called my name. Do, 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 do. Yesterday's work. All right. All right. How are ya? How's your mum? Hello. G'day, mate. Reaper. I guess it's about 9 o'clock. Sorry, I'm a little bit late. I was early. Then I had a dirty frother. I had to clean my dirty frother. Yeah, Rizwan, you know it was Coldplay because there was only 3 chords. Must be a Coldplay song. All right, so let me pop my chat. pop out chat. I'm almost ready to go. Get my drawing tool going. Got to click on that. Bum, 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 bum. Bum, bum, bum. Look at the pound. Look how it falls for you. And all the trades you do. They were all awful. All right. Yeah, Jean-Guy, I got to figure it out. I believe it was an issue with Zoom's new Zoom security settings. Long story short, lots of people got in and lots of people didn't. And everything I did was correct, but again, it's 100% my fault. But it's Zoom did it. All right, so I'll try to get that fixed today. Okay, so it is approximately 9 o'clock. Let's go. Namaste. Never mad at the fact he's corrupt like a senator. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Ni hao ma. Happy Friday. I woke up this morning and all my Windows PCs said, hey, welcome to the new... Well, did anyone get that message? Welcome to the new Edge. We installed a bunch of software you didn't want or ask for, and now we want to replace Chrome. You cool with that? I'm like, no, actually, I feel dirty and used. But thank you, Microsoft. That was a good idea. Talk away. So anyways, that machine apparently needs to be reset. But good to see you. My name is Wayne. I'm a currency trader. I love doing what I'm doing. Typically, we're talking about big trends and little trends. Now think of it, for about the last 2 weeks, is that fair? I haven't even been going through all my charts. Have you noticed that? That I haven't been doing gold and oil and Bitcoin, and then I'm like, let's look at euro dollar and euro yen. Let's look at pound dollar. Let's look at pound yen. Let's look pound Swissy. Let's go over, look at this. Let's look at Rand. Let's look at Lira. Let's look at this. Let's look at that. You notice I haven't been doing that routine? Why? Because 4 weeks ago, I told you the markets were smoking hot. And we need to be like looking to move fast to get into big opportunities. And then I'm like, it's all going to go away just like that. It's going to happen on the 10th and it'll be all over. And then it'll be summer. And then we got to really focus in on our trades. Plan big, expect small. You notice how like the last 24 hours, for example, nothing's happened. Now, if you've been forcing trades over the last 2 weeks because you didn't see this coming, it's like you're that dude, right? You're that dude standing on the street and you're like, why is everybody running away from the beach? How come everybody's running away? Where's everybody going? You're like, dude, tsunami, you should probably run. Hey, what's going on? What should I do, man? Everyone's running away. Why is everyone running that way? You know what? You should just turn and run. So anyways, in this case, you should have seen it coming. And now you should be at a point where you should be reacting to this nothing. And this nothing can be a horrible experience. Because the nothingness, in my experience anyways, my personal experience over the years, my losses come from when nothing's happening. Is it not, Jimmy? I apologize. My life is pretty weird right now. I apologize for that if that's true. My losses come from when I think something's going to happen, so I place a trade and nothing happens. See, like, if you have a trade plan, and you think, because a trade plan is like when you think something's going to happen, right? So you're like, that's what a plan is. So when you execute a plan, you should make money. I think we agree. Like, your plan shouldn't be like, I think I'll plan on losing money. No, you plan on opportunities that will make you money. So any sort of period of tough time, I found in my trading career over the years and 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 years come from when I drop trades and then nothing happens. And so I got pretty good pretty quickly at recognizing times when things are not going to happen. Now, why is that? Because that's where most of my pain lived. And I think, I like to think that at least I might not be a smart man, but I know how to avoid pain. That means I'm not brave. It means, right? It means nothing. It just means I wake up in the morning and I'm like, I don't want to get hurt. I don't want to die, right? That's me in the middle of war. I wake up in the morning in my foxhole and the first thing is, I don't want to die. I want to go home. And then I realized the only way to go home is to win the war. So you got to go kill some bad guys. So I don't know. So the bad guy right now is low volatility, low volume. And that's an enemy that I saw coming. And I'm in defensive mode. Very cool, right? And so do you notice how my expectations changed? So in this case, even the way I've been coaching has changed. Why? Because I expect nothing. So why would I go through 19 different charts and say, look, nothing's likely to happen here. Nothing's likely to happen there. Instead, we've been focusing on real, fundamental analysis, but also the fundamentals of technicals, right? What does this mean? What does that mean? How should you adapt to this? How should you adapt to that? So I hope you appreciate that. Okay? So, by the way, my name is Wayne. Welcome to the Forex.Today YouTube community of 14,000 foreign exchange traders. We're positioned all around the world as a community. We see everything and we know everything. So the challenge here is how do we share all this knowledge and come together? And that's what we do every single morning, currently during summer hours, 9 o'clock in the morning, because I'm up super late doing summer school too. So thank you for being flexible with that. And so our goal right now is put together trade plans for tomorrow or next week or next month. If you haven't already executed your trade today, you're probably going to lose money. Okay, I have to reinforce that every day. If you're logging in, you're like, I wonder what's going to happen in New York. You know what's going to happen in New York? You're going to lose money because you don't know. You're already here and you're like, what's going on? You're about to lose money because you don't know what's going on, right? What's going on in New York? Well, what did you plan yesterday would be the answer to that, okay? And we had a plan yesterday, so we'll see how that came together or not came together. Okay? And I hope so far, even though we're only like 2 weeks in the summer, I hope you've had a positive experience or an aha moment or something that you'll remember that for next year and year after and year after and year after. Okay? Huh? Cool. Sponsor of our community is tradersway.com. If you're benefiting from these webinars, if you like these webinars, if you find them educational, if you find them entertaining, if they just fill time while you're putting together trade plans, then you owe Traders Way some respect. And you show that by visiting tradersway.com, opening up a demo account. Okay? This ain't free, there's an obligation. Open up a demo account to Traders Way, and then give them the opportunity to earn your loyalty and respect as a broker. And one day when you're ready to trade real money, and they have proven to you that they actually enter your trades the way you want and ask for, then and you want them to be an execution partner for your Forex trading business, then you can fund it with real money. You can have an ECN account, you can have a fixed spread account, you can have a variable spread account. It's your way at Traders Way with Traders Wayne. Do I wear glasses? Sure do, sure enough. I think these are my reading glasses because I've just been reading case studies and case studies and case studies and case studies. I think my other ones are in the movie theater. Anyways, I seem to leave them there a lot. I'm like, I don't need these glasses here. So anyways, good morning. These are my charts. Comment allez-vous is what the charts say. So how did you like the supply and demand economics yesterday? Hope you appreciated that video. In the live trading group, we spent an hour and a half going over the IMF report. Well, closer to an hour because we had some login problems because of the new Zoom security. But it's so secure, no one could get in. But, sorry, that's my ghee. I always have to stir my coffee now because I got like a half a stick of butter. Okay? But, so really my focus over the last 24 hours was teaching people how to understand the story behind the numbers. It was really interesting because when you look at numbers, if you look at a spreadsheet, you might just see numbers and you're like, oh, is that good? Or, oh, is that bad? And what you may not see is the story behind it. Why is it that way? And if you can understand why is it that way, like if that's your narrative when you look at the numbers, you'll understand how money flows. Because is it? No, it's ghee. I don't know if it's European butter, but it's just ghee, so it's like clarified butter. Okay, but our job. Okay, so let's say you're an analyst. You might just like bust out the report and say, this is what the IMF said, and here's the numbers. But, you know, eventually as an investor or as a portfolio manager or someone that makes the decision, it's not the numbers that matter, it's how they impact the flow of money and understanding why. Why? Okay? So let me ask you a question. One of the things we talked about last night, but we also talked about it a week or two ago. I said that the Central Bank of India acquired the largest accumulation of foreign exchange reserves in their vaults in the history of the Central Bank of India. Why? If I asked you to write, let's say, a 5-page paper on why, and then how, and then the consequence of the currency, and then the sort of the strategic purpose of that policy and what their expectations for the economy will be. Could you do it? Just bust out your basic college paper. Very well said. Okay? Yeah. But it's important to know these things. Like, there's a why, there's a why, there's a why. So now let me say, Ashish, what two currencies do you think they accumulated most? I'll say 3. What 3 assets do you think they accumulated most since February? Crypto rate says rubles and Mexican pesos. Probably not. Euro and dollar. And what would the third asset be? I'm guessing gold. Okay? Euro, dollar, and gold. Okay? And over that period of time in which they were buying, because remember, they already did it. You have to understand, they already did all of that. So in the process of them loading the boat with dollar, euro, and gold, why gold? Why not? Because it's gold. Central banks love gold. It's a store of value. It's a medium of exchange, right? And it's a unit of account. Really, it is closer to money than Bitcoin. Okay. Okay. So anyways, They buy all this stuff, okay? But what did, right? And then in exchange for receiving assets like dollars, India gave the world rupee. Rupee. And in exchange for buying the euro, they gave the world rupee. And exchange to buy gold, they got gold, but they gave the world rupee. Rupee. So they flooded the world with rupees. And what happens when supply goes up? What happens to the value of any asset when supply goes up? Okay. Even when you're manufacturing, every time you double manufacturing output, your cost per unit drops by 30%. Okay? And then you make double again, and then your per unit cost, the marginal cost, goes down by another 30%, so on and so forth. Okay? So if you made one coffee cup, let's say you order one coffee cup from the factory. They're like, yeah, that's $14.95. You're like, well, what if I order a dozen? They're like, oh, well, we can give you a wholesale price or let's say we can give you a deal, right? So you can buy them for $11 each. And then you're like, well, no, I want to buy 300. They're like, oh, really? We'll give you the wholesale price, $7.99. And then you're like, I want to buy 1 billion coffee cups. You get to the point where you're buying so many materials and so, buying whatever you need to make that coffee cup. You're getting such a good deal from all the suppliers of these natural resources. And you're making so many when you add up the cost of the rent of your factory and the cost of the electricity and the cost of the input cost and the cost of maintenance of the machines and the cost of the labor. You add it all up and your per unit cost of this is probably less than a penny, because you're making 1 billion of them per cup, because a lot of those costs are fixed costs. You understand? So anyways, whatever. So in this case, we're talking about rupee. The supply of rupees in the global foreign exchange market has significantly increased from, let's say, in the month of March. They bought dollars, so what happened to the dollar? So now I'm trying to share this information with y'all because I often get questions about, like, Wayne, I thought the American economy is tanking. Unemployment's at 13%. Why is the dollar strong? Okay. See, somewhere in here was the Central Bank of India buying up gold. I don't know that, and I'm guessing on the gold, but I'm sure if you looked at the data, the central bank buys gold for sure. Okay. Thank you. Well, so what you want though, Peter, is the change, right? But my other point though, Peter, was the amount of their foreign exchange reserves was at an all-time high. So clearly something had happened that absolutely freaked out that central bank and many other central banks, by the way. This isn't an Indian issue. They're simply an exporting country. And the last thing they want is the rupee to be strong. And in particular, strong relative to China, their biggest competitor. Okay. Got it? So anyways, just interesting, right? So now if all you're focused on is technical analysis, Okay. Okay. This is your opportunity to trade. Okay. And you can see there are half decent opportunities. Could you predict this? Yeah. Yeah, you could. If you were already a bear, could you have waited for this? Oh, for sure. Okay. But even that is like, well, it's still an uptrend. You're right. Because the lower high isn't the issue. I mean, there's pivots in here that can help you predict that. So if you're really aggressively bearish, oh yeah, you can anticipate that. But even this is a little bit, aggressive, let's say. But once you're down here, game on. You see that part? Because you have an anticipated exit for bulls. Okay, that's one. Two, you have the lower high. Three, you have the lower low. So what's game on? In particular, if you're already a bear and you anticipated the exit, you see the lower high, then you see the lower low. What's number 4? What's number 4? Not take profit because you're a bear. You're not even in the market yet if you're conservative. Yeah, lower high. And what do bears do to lower highs? Sell, sell, sell! Yeah. Ain't that random, eh, gamer? So. A random gamer. Okay. Cool. So now you use your technical analysis. Okay. Lower low, you look left, you drag that across, there's your lower high. Lower low, you look left, you drag this across, there's your lower high. Right? And then, wow, then this is lots of little ones. Okay? So it really depends on how you want to do this one. There's lots of little trades. They're all tricky little things. They're all tricky little trades. I don't know if they're even worth your time. But, okay, because here's 113. Okay? And we're just kind of bringing it down. So, like, I don't know if you're taking all these pissy little trades. Right? You'd probably be better off working at 7-Eleven, make more money, right? Per hour. You're like, what'd you do all day? Well, I traded the euro dollar. I made $22. You're like, dude, you worked 10 hours. All right? You're like, that's not a lot. I had a crew over here on the weekend, and they're like picking up yard clippings and branches and bushes that were trimmed. They're picking up that waste, and they put it in the truck, took it away. And I told my son, like, son, you should be doing that. You should be making the money. He's like, well, how much did you pay him? I'm like, yeah, I paid him $500. He's like, what? And he just stopped. He's like, you did what? How much? Hey, man, it's hard work. So the last thing you want to do is sit in front of your charts for 10 hours and make $20. Okay? Especially when I told you this is what's going to happen now. Okay? Well, Anthony says it's free cost to you. No, there is a cost. You have to go to tradersway.com and open up a demo account. That's the cost. Doesn't cost much, but there is a cost, right? So, actually, how many of you ever sat in front of the charts for 12 hours and lost money? Like, oh my God, right? Doesn't that feel so good? Brazil, I love Brazil. Where in Brazil? Brazil, huh? Brazilians are awesome because they're always like, I love it, Brazil. It is my country. Let me show you. Well, you're welcome to my house. You come to my house. We go dancing. Yeah. Italy. South Africa. Another beautiful country. Yeah, so many beautiful countries, right? Like Brazil. Brazil's beautiful. Italy. Oh, Italy's beautiful. South Africa. Oh, South Africa is beautiful, right? Yeah. Jamaica. Jamaica me crazy. All right. So yeah. So here we are, stuck in the mud. Cool. Cool. Right? Now, didn't we have a plan like on Monday or Tuesday, something about taking this down? Right? Wasn't there a plan in here somewhere down to 112? I don't even remember anymore. So anyways, we're still looking at 111.50 to 112 is right? Oh yeah, Peter, how many people have been to I've never been able to say it right. I always say the Falls. Ignatius. How many people have been to the Falls? Richard says, when am I going to go to the Bahamas? Actually, I'm overdue going to the Bahamas. My favorite place in the Bahamas is Grey Cliff Hotel. Tiny little thing on the hill, not the big giant mega hotel. Tiny little Grey Cliff Hotel, but I love it there. But yeah, the falls. So I've actually stood over the falls in southern Brazil and looked down the Devil's Throat. The funny thing about that experience is I go with a whole bunch of friends. My wife's with me and like dozens, like probably 24 of my close friends. And we fly down there. We were in Porto Alegre and then we're like, oh, let's jump on a plane. Let's go see the falls. So off we go. And then we get to the falls and we go for the nice walk. And I'm like, oh my God, there's guinea pigs everywhere. This place is paradise. And we're walking through the jungle. And finally you go way out and you can like look down the Devil's Throat. Now in America, when you look at a big waterfall, you look at it from a quarter mile away. You're like, I think I can see the waterfall. This is like Brazil, right? You're like, hey man, you can just like jump off anytime you want. Like you're literally hanging over the falls. You're like, and there's barely any ropes. Like, dude, you fall off, you fall off. It's not our problem, right? So all of a sudden, like, oh my God, you're looking down the falls, and it's so amazing. Like it's the Niagara Falls of South America, right? So we get back to the hotel and like, oh, that was such a good experience. I'm so glad we did that. And they're like, well, tomorrow we're going to hike all the way to the bottom of the falls and look up. And I'm like, wait, no, I had a good day today. I saw the falls. They're amazing. I'll never forget it. They're like, yeah, but wait till you see it from the bottom. We're going to spend 4 hours hiking down to the bottom and then we're going to look up. And maybe we'll go on a boat and get all wet. I'm like, well, that's stupid. Why the hell would you do that? I already saw it. It was great. Looking down was amazing. Like, now you're going to hike all the way down, get on a boat, go on there, get soaking wet. And then when you're soaking wet, you're going to hike all the way back up? I'm like, that's stupid. So I'm like, I'm not going to go. So anyway, so they leave and they're like, that guy, what an idiot. These are my friends. They're like, that's typical Wayne. So anyway, so I got a helicopter and I flew over the top. I flew over them in a helicopter and I looked over the falls like a second time, but this time from a helicopter, and I'm looking below my feet and I'm like, Oh man, these waterfalls are awesome. Like way better than getting in a boat and getting soaking wet and hiking for 8 hours. I'm like, pfft. Yeah, yeah. So that's how you do it. Anyways, there's a glimpse of my life, huh? They're like, yep, there you go. So yeah, if you ever get to those falls, look down the throat once and then take a helicopter and do it the second one, right? The second time. And they were so tired when they came back. They're like, what'd you do? And like, oh, it was great. Rented a helicopter, flew over the falls, and I got back and I saw a bird sanctuary and a toucan sat on my shoulder, and I saw a bunch of parrots, and that was great. And then I went into the bar, and then I went swam in the pool. I'm like, it was awesome. What did you guys do? We hiked for 8 hours. Yeah. Wow, that was yeah, good for you. All right, bears. Boom. Bulls. Boom. So let's combine the two. That is one plausibility depending on who you are. Amazing food over there. What, in Brazil? Yeah, don't drink the wine though. Yeah, of course, the barbecue and stuff. When you're in southern Brazil, when you're in gaucho territory, of course you're going to have the steak. I remember though, in Porto Alegre, a buddy of mine, we wanted to smoke a cigar. None of the places were open. It wasn't a good place to find cigars. And we find this high-end steak restaurant, high-end, like super high-end restaurant, and they sell cigars. We saw it on the web or something. We go there and it's closed. Like, no, dude, we're only open for dinner, and you got to have reservations like a year in advance, and you know it's like $1,000 for a piece of meat, right? And like it's really high-end steakhouse. And like we're literally banging on the door at lunchtime, banging on the door like no, 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 no. Like, hey, we just want a cigar and a cocktail. So we talked to the owner, and he's like, well, then come on in. We sat there, and they served us at this table, and we had a beautiful whiskeys and smoked our cigar and sitting in nice leather chairs. We had the whole entire restaurant to ourselves, but they had sort of like a little lounge, and every once in a while a guy would come out, you want some cheese? Oh, I love it, cheese. That's how you roll, man. Some good times. Brazil's fun. Especially if you're Marky Mark. Yeah, I forgot to mention that part. I kept telling everybody I was Marky Mark. All right. All right. So these are plans, right? And I think we had this plan on Monday, anyways. That there's only one place a bull would buy. This is just the exit. I mean, bears would have sold here, and that failed. So bulls kind of had like a mediocre run. But I want you to put this in your sort of summer vernacular here. Um, and we did talk about this, I think, a little bit yesterday or the day before. In a trending market, let's say, in a bullish trending market, you're thinking like M2 to M4, right? In a bearish trending market, you're thinking M3 to M1. So what do you think in a range bound market that you should be sort of what's the language you're speaking inside your mind? Richard. Yeah. Well, that's how you do it though, Richard. I've done that my whole life. R1 to S1. So it's not sort of a predictive, but it's it's like how I describe as your expectation, right? So do you remember when I say things like plan big but assume small or expect small? It's like these lines are becoming more and more important. So typically, like if you're a seller here, there's an M3 that's so ridiculously obvious, but you're thinking down here and you didn't get it. And here, if you're a bull, you're buying here and you're expecting this, but you didn't get it. So now you might play these things, but instead of expecting M1, maybe you just get down to support. Or, right, or same thing. You're at M2, you're thinking M4, but you only get to resistance. Or the range is quite literally this one. So so you're planning for this next month, okay? So there's a couple of things to this. On a weekly basis, you might get this to this next week, okay? That's what you're planning for, but you might only get this to this, or, and now I have to use a third color, I guess yellow, you get M3 to S1. Because you're still going to do the bearish plan if you're a bear, because if you're not doing bearish plans and you're a bear, then you're not really a bear, right? So you're still going to strategically think like a bear, and that means you would take it off the M3, but don't be shocked if you only get down to S1. Other pivot points, FD9. I recommend going to youtube.com/fxbootcamp, and there's at least one free training course there that's 4 videos long, and I'm sure there's helpful information like that in there. Okay, make sure you subscribe there as well, everybody. youtube.com/fxbootcamp. There, I think on that YouTube channel, there's 4,000 videos on Forex. 4,000. Okay, that's a lot. That's better than most gurus, huh? The funny thing is, you tell somebody that, like, oh my God, that'd take you like 10 years to do that. No, it took me 12. Easier than building the pyramids. Right? Remember, we overestimate what we can do on the short term, and we underestimate what we can do on the long term. By the way, my phone has just been going ape crap. What is it? Oh, school. No wonder. Gee whiz, 17 messages. Stupid school. I got a ping in class yesterday because I'm loud. And so people hear my voice, and every once in a while I say something reasonably intelligent. So one of the students pings me privately, and he says a couple of things. I say a couple of things back. So I Google him, right? Because now he sounds intelligent. So I Google him. He's the head of North American equity trading from one of the largest institutions in the United States. Like, that's Harvard. That's Harvard for you. Like, literally, one of the biggest banks in the world. Okay? Literally, a top 10 global bank. You know this bank? For sure, like 1,000%. And he's the head of global equities. Gotta love Harvard, man. You gotta love it. All right. So anyways, here's how I broke this down earlier in the week and how I'm still breaking it down. This was the big up move. This was the big profit taking. And now we consolidate. Okay? And frustration with this process is going to lead to bankruptcy. Okay? By the way, guys, thank you for subscribing. Welcome to the community. Okay? I've been doing live webinars for 15 years every single day. Where have you guys been? The guys that are just subscribing now, where have you been for the last 15 years? Where you been? Been waiting. On a bed of nails. How does that go? On a bed of nails, she made me wait. Yeah, yeah. At work. Oh, watch your foul language, budget. You're not supposed to say four-letter words like that. So this is kind of, let this happen as long as it wants to move sideways. Okay. Whoa, dude. Paul, are you in my class? You know, I swear it. I made that exact comment yesterday. So I'm like, dude, are you in my class? Are you in my Harvard class, Paul? You're a student, right? You Googled me. You're like, what does this idiot do? You're like, oh, he does some Forex stuff. Cool. Okay. I think Paulie's in my class. Cool, man. All right. So let's simplify then. Let's do something interesting. Let's take a vote. Will euro dollar go up in July, or will euro dollar go down in July? Let's take a vote. All you have to do is type up or down. In a bed of nails, she makes me wait. Don't say sideways. You just failed. I asked a very specific question. Down, down, up, down, up, down, up, up, down, down, down. Like we're 50-50 again, huh? So, okay, a little more down and then up. Down and then up. So here's the thing right off the bat. You notice we're 50-50? I didn't say sideways. I didn't say, what's your idea? You have to pick one. Selling may and go away. So I have a different saying. I say buy in May and go away. So down and up. I swear to you, we're like we're very close to 50-50. And then so what does that tell you? What does that tell you? We're basically 50-50. Larry's going with the chart says that everything's in the chart. Maybe. See, you got to be careful with that one, Larry, because technical analysis is a self-fulfilling prophecy. And if nobody's trading, your prophecy might be frustrating. Yeah, so if half of you think down and half of you think up, and the other half say sideways, then it's going to move sideways. So here's how we should probably frame next month. So let's do this. I wait for you with or without one standard deviation from a weighted mean. One standard deviation below a weighted mean. There's the current weighted mean, which is technically very bullish, but probably not likely, huh? The next part would be this issue, okay? And I'm reading into this a little bit based on what happened, and what happened is important, but what's likely to happen next is just as important, right? Is PCE important in the market? Yeah. Yeah. But why? FT9. You have to understand why. Okay. All right. So, anyways, so I think a textbook would say this to this is your likely range. Okay. I would throw this down as another possible. Bears do what bears do, and they do it hard and fast or whatever, and then it recovers, and then we head back and we're stuck in a slightly different range, which is just a consolidating a consolidating pivot range. And all we're doing is moving from here, which is support, to here, which is resistance. And your mean is basically where we are now. You see that? Which is a middle level. What percentage is good for closing a position? 100%. Okay. So like Mr. High Volt says, probably down again, exponential COVID cases in the US, people will stay home again. Awesome thinking. Whether it's true or not, it doesn't matter. And we had sort of a brief conversation about this, I can't remember, but it's an astute way to think. Mr. High Volt is right in the thought process. Of course, we don't know the future, so we don't know whether the assumption is right or wrong. But from that, Mr. High Volt knows what he wants to trade and how he wants to trade. And that's more important than what actually happens. So someone else might say, well, oh, it's the liberal media, blah, 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 or it's this other thing, or this other thing, or this. But ultimately, we don't know. But what's important is Mr. High Volt knows how and what and how he wants to trade. So Mr. High Volt would say, well, this is going to go up, and if we tickle 113, I'm going to sell it. Cool. That's what matters. Okay? Now think of it this way. Mr. High Volt starts a new fund, and I start a new fund. My fund is COVID's a bunch of crap, and we're just the world's going to come right back and in a big hurry after this big hoax, and macroeconomics just takes off. We have 8% GDP globally next year. Cool. There's my fund. Here's the thing. Now I go out and I talk to people about it, and I tell them my idea and how I want to invest. And I will find people that agree with me. They like my point of view. They like my analysis. And they give me money to trade. And then Mr. High Volt goes out and says, this is extremely serious. And things are going to get worse before they're better. And if you only look at the statistics, and if you only look at what the doctors are saying, and if you only look at this, it's clear as a bell. And Mr. High Volt hits the road and goes on a road show, talks to lots of people, and many people will share that point of view and say, well, Mr. High Volt is very sharp and more than moderately attractive. And they give him the money to trade that point of view. And here's the other thing. At the end of 12 months, we're probably both profitable. The worst outcome is, I don't know what's going to happen. I don't know. I have no idea. Well, I don't know what's going to happen, and nor does Mr. High Volt. But the reason we're successful, if we have a sellable point of view. I know where I stand, Mr. High Volt knows where he stands, and we can go out and accumulate capital and make investment decisions based on those hypotheses. Right? Okay? And by the way, that's not my opinion. I'm showing the equal but opposite. Right now, I'm studying venture capital, and my other class is on real estate financing. So in this case, it's not like buying homes and flipping them. This is like developing real estate investment trusts that get traded on the market like mutual funds, or starting a syndicate where you buy and sell typically commercial or multifamily real estate in like a hedge fund like scenario, or issuing bonds and raising money more like a corporate, and investing, of course, all of that into cash flows. So we're basically just doing lecture number 2. We're banging out all the boring, easy stuff like time value of money, internal rates of return, and all sort of like the math. So just like straight into the math, which is super easy because you should know finance at this point. Anyways, it's pretty interesting. Harvard's not cheap, so I'm spending, I don't know, for the summer, I don't know, 10 grand in classes, I think. And then you got to buy $1,000 worth of textbooks. Nice, right? So, fun. Yeah. Fun hobby. Okay. What's the admission criteria? Well, first of all, I'm in a master's degree candidate, right? So I'm wrapping up my master's degree. So what's the requirement? Um, wicked smart. It's Harvard. So what's the requirement? You have to be a Harvard student. Cool. So yeah. So there's that. So expected range, let's say minimal expected range. You're selling around 113 and you're taking it down to maybe 110. So yeah, so I'm in my 5th year at Harvard, 4th year in my cohort, and literally my last 2 classes. And then I signed up to do some research at Harvard Business School in October. I'm not sure if I shared that information yet, but I've been accepted into that cohort. It's just a short-term thing, but it's just sort of, I kind of look at it as a sort of a capstone to my master's degree, just to, I don't know, polish it up even a little bit more. And that's doing, again, research on hedge funds and other types of alternative investments. So it's stuff I already know, but it's nice to have it on paper that I'm an expert. I asked a woman the same question. Sebastian says, what advice do you have a person who's just starting in the world? So I asked this old woman, I knew it would be the last time I ever saw her. So she had lived her whole entire life through, she was 85, 90 years old. I can't remember. But I knew, like, I'm not going to see this woman again. So, and in fact, so anyway, and I didn't know her. I was new to the family and all that kind of stuff. It was somebody's mom. I think my wife's father's mother. So anyway, grandmother, I guess. So anyway, I don't know her, never met her before, but I look at her and I'm like, I'm never going to see her again. So I should, right, spend some time with her. So anyway, so I sit down next to her and I ask the same question. So like, what do you have for someone that's just, what advice do you have for someone just starting out in the world, right? And apparently she was a strong but cranky woman, which I love. I love strong, cranky women. And anyways, so I ask her the question. She turns to me and she says, mind your own business and keep your mouth shut. And I'm like, oh my God, that's actually really good advice. Most people would be insulted. And I'm like, and I think she could see that I knew. I knew. It was real advice. It was cranky and crotchety, but there's humor deep, dark, down inside. There's humor to it. And as she was leaving later in the day, leaving, and she's in the car and the car's pulling away, I made eye contact with her, and she knew I knew that we understood each other. It was great, a good moment. And like 3 months later, she died. So you should always ask when you have the opportunity. Yeah, it's right. Now, right, it's hard for me to keep my mouth shut and mind my own business, but I'm trying. No. All right. Good advice. All right. So that's that, right? So there's an expected range. I gave you a lot of information about tempering enthusiasm and stuff. So now what you should probably do over the weekend is carry out similar exercises for all the things you like to trade. Okay? How many people here read the IMF World Outlook? Did it come out yesterday or Wednesday? I think it came out Wednesday. It came out, right? How many people read the IMF World Outlook? My live trading group broke it down and we talked about it for an hour and a half yesterday. No, huh? Oh, yeah, Peter got it? Yeah, Peter's a pro. So the IMF has PhDs and quantitative analysts working full time crunching deep, deep, big, big data. And they tell you what they came up with for free. But what? You ignored it? You're like, I don't care about that stuff, Wayne. Really? Yeah, well, Peter, like, a college professor would say, all else being equal, right? But what that means is nothing changes. But of course, nothing ever not changes, which is always funny, right? We're like, what do you mean by that? Especially in an exam question when they're like, all else being equal, blah, 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 blah. I'm like, I don't know what that means. Honestly, don't know what that means because everything changes. Nothing stays the same, right? Paracentrist. Um, so, but yeah, so if nothing changes and if everything stays right, well, and if you remember, I did a FX boot camp video maybe a month ago, smoking a cigar, reading a newspaper, and I talked about this where I expected a very big jump in GDP in 2021, like big, massive, huge year. Um, and so now the IMF is predicting that too. Cool. So I'm not a quant, I'm not a PhD, but we already talked about this a month ago. But now the IMF is backing me up. Cool. Thank you, IMF. I appreciate that. Okay. Yeah, maybe they want yeah, maybe, probably. Yeah, I would have to think so, right, Brad? Probably the IMF is watching my YouTube videos for sure. It's like the line, the greatest thing about me is my modesty. I just love that line. So anyways, look at this. How pretty. La la la, ba 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 ba, ba da 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 da. So pretty. Ba da da ba 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 da da. Growth in the advanced economy group is projected at -8% in 2020. Blah, 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 blah. And it starts breaking things down, beautiful things. So this is why we spend an hour and a half talking about it. The trick with all of this, of course, if you're new to economics, you look at the numbers and you see numbers. If you've been around long enough and you know what the numbers mean, then you start looking at the numbers and you see a story. So like, if you don't know anything about playing the piano and someone hands you sheet music, what do you see? A bunch of notes on a piece of paper. You're like, oh man, this looks really complicated. If you're a concert pianist and someone hands you sheet music, you don't see notes, you hear them. Right? So you got to know the story. Okay, you got to know the story. So wonderful, like you should, right? Look at this, fiscal developments and outlook by country, income group. How do poor countries fare from this? How do rich countries fare? And that's the cool thing about, like the IMF does this a lot, right? Like separates OECD countries from developing countries, and then they throw them into regions. How's, MENA or North Africa doing versus other places? And, oil producers, how are they going to do? It's all very interesting stuff. Okay. So all you have to do, guys, is go to the IMF website or type in World Economic Outlook. Okay. And all this is available. Okay. So some people don't read good. So you're going to have to like watch YouTube videos. And they provide that too. Ba, 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 ba. And this is what Peter was talking about. 5% GDP next year. Holy smokes. Compared to like 2 is typical, right? So 2019, the stock market was up 30%. And GDP advanced 1.7. 2021, they think it's going to be 5. We're going to go from less than 2 to almost 5. Wow. So what's going to happen, let's say, in the next 18 months? How many people here plan on pouring all their money, their entire net worth, or a significant part of their net worth, into the bond market? How many people here do you think are going to do that? They're going to corner the market in bonds and treasuries. Where can you read those? It's the internet. Type in World Economic Outlook Update June 2020. And since it's on imf.org, you might also want to just maybe type that in too. Okay? So of course, nobody's going to buy bonds, right? So where's it going to go? How can I start if I'm just a learner to economics? Go to university for 4 years and get an economics degree. It's only 4 years, so it's a big deal, especially if you're young. Seriously, you should do it. You're starting out in life. The 4 years you invest into getting smarter, let's say, will exponentially change your growth rate for the rest of your entire life. And by the way, you make almost all your money in the last 10 years of your life. Maybe even the last 5 years of your career, I should say. The last, probably let's say 7 years of your career, you'll make 2/3 of your money. So what you're doing in those last 7 years is important. And if you want to do stuff that's worth a lot of money, you should start in the beginning. And then you get a good job because you're smart and you have an education, which means you're doing interesting things, which lead to more interesting things, which lead to a better job, which leads to more responsibility. And all of a sudden, you're 58 and you're the vice president or you're the CEO or whatever it is, and boom, you're making big money now. And you ride that out till you're 65, 66, 67, making big money, saving almost all of it because you already bought your own home. Your kids are already off to college. And now you're making big money. You don't even need money anymore. See, that's the funny thing. At that point, you don't even need money anymore. And then all of a sudden people are like, you're so smart, we want to give you lots of money. And you're like, where were you when I needed to buy a house for my kids? Where were you when, right? So anyways, that's how you get there. How do you raise venture capital? So I'm in a venture capital class, right? What's the best way to get the high valuations for your startup? First of all, you don't need the money. If you need money, no one wants to give you money. But if you don't need the money, you'll have people like tripping all over themselves, begging you to give that for the opportunity for them to give you money. But you're like, why? Okay. It's funny. It's how it works. You want to get a loan from a bank? You have to prove to them you don't need the money. Has anyone done it the other way? Go to the bank, you're like, I want to borrow $1 million, but I don't have a job. I don't have credit history. I don't have any assets. But I have a really good deal. They're like, we're not interested. Thank you. Right? But if you already have a whole bunch of money and you already have stellar credit and you already own a bunch of assets and now you're like, hey, I need some money. They're like, oh, we'll give you 80% of it right here, right now. You're like, oh, cool. So there's my advice. Leverage up in knowledge and experience, right? So one of the stats in my venture capital class last night, they're like 98% of entrepreneurs fail at raising money. I'm like, yeah, because 98% of them have no idea what they're doing. 98% of their ideas are really unfundable because they're kind of stupid. And even if you're a brilliant engineer and you got an interesting product, you go out there and you don't know anything about sales or marketing or communication. So you get out there, you bumble through it, and no one wants to invest into that. So yeah. So 2% success rate in venture capital just to get money? Yeah, that sounds about right. Because what are venture capitalists looking for? Smart, intelligent people that work together, that communicate well, that communicate effectively, and they found you through a hardcore sales process, right? And then from that, you have an amazing idea and a real product and real customers, and you're already earning income, can show profitability, and can scale up from a $500,000 to or $1 million investment to $1 billion in 10 years. Like, dude, that generally doesn't exist. So you have people walking around begging for money and other people trying to invest money, and they're both chasing mirages. It's very rare that it actually works. It's pretty funny. All right, so that's how you do all this, guys. Do some research, get into it. Fall in love with doing the research. So what I just showed you here really has to do with mostly with sales and marketing. You're raising a fund. You want to be a professional Forex trader and you want to raise a fund. This is what's important. You're like, you know what? I was just on the IMF website and reading their World Economic Outlook. And this is where their PhDs and their quants have spent thousands of hours right? Crunching deep data, big and deep data. And they came out with projections for 2021. And what they said was blah, 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 wah, wah, wah. But the fact that you're sitting there over lunch or cocktails or in a coffee shop at 7 o'clock in the morning, right? Breakfast meeting. You're sitting down with this potential client and you just told them what you do. You're not talking about making money or moving average crossovers or what MACD said, right? I don't know what I'm going to do next week till the candle closes. Really? Come on. Okay? You should have some idea what you want to do before you look at the candle. And then if the candle can confirm or deny your hypothesis, right? So you could say, but the client doesn't care about that. The client is like, how does this guy predict the future? How does she get so smart? Do you understand that point? And ultimately, you only have to be 1% smarter than your client. You don't have to be the smartest person in the world. You don't even have to be the smartest person in the room. There might be other people in the restaurant that are smarter than you. You only have to be 1% smarter than the client. And you're like, you know what? I was reading all this data produced by all the quants at the IMF, and they're predicting this big move in GDP. They're looking at almost 5% GDP. They're like, wow, I've heard of the IMF. You're talking about GDP. I know this is economics. It sounds really smart. I don't know any of it, but I know this person should be managing my money. Okay? It's very actually helpful to know the IMF thinks we're going to have massive GDP growth. Okay? Look at this. China, India, South Africa, Brazil, Russia. Now, why did advanced economies lose 8% and emerging economies only lost 3%? Why is that? Anyone want to take a guess? What's up, Daniel? Shut down businesses? It's hard to lose money when you don't have any. Okay? In the month of March, I wouldn't be surprised if Jeff Bezos personally lost $20 billion. We should probably Google that. He probably lost $50 billion in a month. Sounds bad to me, right? Jeff Bezos loss during lockdown. Okay, it's already in my browser apparently. Oh, he actually made 24 billion during that period. All right, well, I guess more people are buying crap from. Oh wait, anyways, but I think you get my idea. Jeff Bezos actually got richer. Yeah, see, Jeff Bezos makes $5 an hour salary, but he made $24 billion in a month doing nothing. Okay, so anyways, so I hope I'm getting through to you in a time when nothing's happening in the market. And when nothing's happening in the market, it's a great opportunity to lose money. Because your expectations and the reality of market conditions are not aligned. Vivek, I love India. So I've only been to half of India, so I got to see the other half. I've been way up north in Punjab, I've been out sort of west, out in Rajasthan. I've been in central, like Agra, and I guess Delhi is north central. But I'd love to see South India. And I don't know anything about Eastern India. Nothing. So someday. Why would the Indian central bank stack up on euro? It's sort of like the well, first of all, they do a lot of business with Europe, but it's also like kind of remotely a little bit the other reserve currency. Yeah, visit Nepal. I'd love to visit Nepal. And by the way, there's a long time FX boot camper who would work with me every single day for years and years and years. And then he went on, I think he became a professional Forex trader. And then on the local news, like he became a foreign exchange and finance and market analyst for one of the Nepalese TV stations. So he'd be on TV reporting on the the Forex market, on the commodity market and stuff. Amazing, right? and uh, and do you guys remember that they had I think it was an earthquake that led to landslides, and it was really hit hard. And I ended up sending them a computer that can run 6 computers because you couldn't buy stuff like that at the time. So somewhere in Nepal is my old trading computer. Got to go visit. Got to find my old computer. I'm like, oh, I miss this old computer. So. You want to join my channel, but you don't know. You click the subscribe button. Oh, is the S&P 500 down right now? Seems like more down than up for a while. But I think the stock market's actually lagging. I think we already priced all this in the Forex market. So yeah, S&P 5 down 1.5. Dow down almost 2%. Okay, cool. VIX is up 8% to 35. All right, so that makes sense. Just more risk off. Remember, what all we're doing is we're trying to take this down to, we're trying to find like a real market price, like a true price discovery. Okay, so we had this crash, and then we had an opportunity to buy, but like I was saying before, and I think we were talking about this yesterday. Whoever wanted to buy Carnival cruises at $6 or $8 or whatever, they did it, and they did it a long time ago, and they're done. Okay, and they're not likely to ever get out unless they get knocked out at break even. Like it's a done deal. They made their bet. They're like, it's either going to zero or it's staying above zero. And their entry is at 6 or 8, which is fine. But it's a $60 stock in the past, right? And they're making those decisions basically forever. And you and I talked about this. I said, do you think someday retired people will want to get back on the ship and go around the world and eat their buffets and go in and buy giant margaritas and fluorescent pink plastic cups in Honduras, of all places? Like, why are you guys drinking margaritas and eating tacos in Honduras? It's like, it's not even a Honduran culture. Like, whatever. Do you think it'll ever happen again? And that's all they're betting on. And will it take 10 years? Yeah, who cares? It's only 10 years. Okay? So they're making those bets. And then the noise up here is more of like the price discovery between short-term traders and a long-term market. And right, and we're in between the trading strategies. So it needs to kind of fizzle and fade, and the dumb money that got in late will get filtered out, and then we'll find a new equilibrium. The problem is the Fed gets in the way and prevents a true price discovery, and you don't find a proper equilibrium because it's somewhat manipulated, right? So here's the story to this all. Let it happen. And it may be slower than you like. And one thing we talked about maybe a month ago was that don't let frustration creep into your psyche. And I think this year, your biggest threat is frustration. I don't think we're going to maintain this tight, low volatility all summer. I think it'll get tight, and then you'll have a bigger move, and then it'll get tight, and then you'll have a move, and then it'll get tight. I think the real frustration is for those that expect big market moves in September, October, and November, and you're not going to get them. Okay? Unless it's extremely obvious to the point where one political candidate basically drops out of the race. So if Trump says, you know what, I give this to Biden. Or if Biden says, you know what, it just ain't working out. I know it's only October, but no one's going to vote for me. So go ahead and vote Trump in. Like if something like that happens, boom, you're going to get your moves. But I think it's going to go down 51-49%. One dude's going to win, and then the market reacts because at that point, you know. So I think you're going to have a tight summer. Then you're going to have sort of a bigger move, a smaller move, and then some consolidation. And you can get very frustrating that you go through, let's say we've gone through now June, and then July, and then August, and then September, and then October, and still nothing major has happened. Okay? That's where your frustration will come in. And what we talked about yesterday is in your frustration, you say, well, it must be you. It must be your activities that are leading to results that are less than enthusiastic in your mind, right? And that's wrong. It's the market. It's not you. So you must maintain your consistency, but you have to have the right expectations. Okay? Does that make sense? But let's say things get worse again. Let's say we have another round. Maybe not all over the United States, but let's say half the United States gets hit again by COVID-19. Do you think the central bank or the U.S. government will provide some sort of support? And what are they supporting? They're supporting the stock market. If the Fed does something, they're supporting the stock market. If the government does something, they're doing something that will support the stock market. Either they're giving money to small business, because remember, the Fed doesn't really give money to small business. So they give it to small businesses to like pay people to do nothing, keep them on the payroll. So the government gives the small business free money, and the free money is supposed to be used to pay for payroll. So basically, they're like, instead of laying people off when we go to 30% unemployment, keep them on the payroll, but we'll just give you money and then whatever. So it's the same as unemployment, except they still technically have a job. Whatever. That's one way of doing it, but that supports the stock market. Because, right? Or if you just give people that actually lose their job, you give them free money, what do they do with the money? They spend it. Which does what? If they spend the money, it's someone's income, it's some corporate income, and that eventually supports the stock market. Like it all, right? And none of this really throws people into saving. It doesn't throw people into the bond market. Right? See, if you save it all, then it doesn't go in the economy and nothing happens. Okay? But if you spend it, you're all of this, which is a form of spending, leads to economic activity, because you go to 7-Eleven and with your government money, you buy a 6-pack of beer, some diapers, and some cigarettes, and maybe a girly magazine, and then boom, that convenience store makes money, and your spending keeps the employee at the cash register with a job, but also the shareholders of that company make money. Okay? Right. Exactly right, Daniel. So all of this eventually is support to the stock market. So that's kind of like the only place right now. Like if you're an institution, you're an insurance company, you're an endowment, like for a museum or a pension fund or whatever, you need to make 8% a year. Okay? You need to make 8% a year. So there's two ways to do it now in this world. Stocks. You like that? Stocks and real estate. Okay? And then, right? And then maybe under there would be a subset because it's really the financial market, but I'm just going to say stocks. But really, it's the financial markets, most of which is the stock market. Not technically most of which, but like psychologically, the S&P 500 probably will go up more than fall, right? But then we know what that means for global macroeconomics, and we can say, oh well, that would probably have an impact on commodities and currencies and all that kind of stuff. Okay, I get that. But I put all of us in sort of like, let's just say the markets, right? But then real estate, because so like a friend of mine in my venture capital class, he owns a real estate syndicate. And so they have a few $1 billion under management in real estate. And, he's telling me that like they're earning 15%. You invest with them and they give you 15%. Well, when you're an endowment, a pension fund, an insurance company, you need to get to that 8 to 10% a year. That's all you actually really care about. So if you can't get it from the bond market, because typically what you'd want to do is create a ladder of bonds and maybe take on some risk and put some into alternative investments and stuff. But right now there's no money in the bond market to be made. So now you got to look at other things. And really what that comes down to is, your sort of your standard, right? Your sort of your standard financial opportunities, and then your alts, right? Standard investments, right? Your standard investments and their alternative investments. And that's what really big money is thinking about. Like, how am I going to make 8% this year? Right? How am I going to make 8% this year? No, you guys are like, how am I supposed to make 20% this month? That's why you're way off. If you can figure out how to here's your competition, guys. So we always talk about competition as not being other Forex traders and stuff. Your competition is you sit down with someone with a lot of money. They're already invested in all your standard financial stuff. They already have a wealth management team or a family office. They already own stocks, bonds, and all that kind of stuff, right? So you come along and you're like, give me money. And the thing is, yesterday they met with someone else, and that someone else said, give me money. So the someone else, your competition, said, give me money. We own real assets. You can go out, see these assets, and touch them with your hands. And they have, right? They have a cash flow stream. You can actually meet the people that pay us money every single month because they live inside this real asset. They pay us rent. And we know over the course of 10 years, or let's say over the course of 1 year in a typical year, the value of this asset will go up, we'll say 4%. Over the last 40 years, this asset has gone up on average 4% year after year after year. Plus there's a cash flow every single month, money in, money out. Okay? And so if you invest with us based on our real assets and our real cash flow and our real appreciation, and the last 5 portfolios we've done, you can have an expected return of 15.2% per year if you give us money. And then you sit down with the same person the next day and you're like, give me money because I'll get you rich. I make a lot of money. I'm gonna go for 25% a month. Right, whatever. I'm gonna do 25% a month, and I don't know what's gonna happen tomorrow, but I'm gonna go big, and we're gonna make a lot of money. It's gonna be awesome. Ain't gonna happen. Okay? They're comparing you to somebody else, another opportunities, some other thing in their portfolio. And they might ask you fundamental questions just to kind of figure out what you think is going to happen in the real estate market. Okay? Okay? So, like, instead you could say, well, ma'am, you should almost look at this as like how you compare to an opportunity in real estate. They could give you something very predictable. And, you know, the returns are probably evenly distributed. There's no fat tail. There's no ketosis. All that kind of stuff that your due diligence warns you about. And it seems really nice. And you'll get your income stream of 15%, you know, and some appreciation over time, and your taxes are going to be complicated, and you might want to amortize these loans over time and try to make money there. And that's really cool. That's really great. But it's a very localized trend. A lot of things can change over time as well. Let's talk about how Forex is different. And then, okay, now it's similar. Your real estate collects rent. I collect income through leveraged interest, right? And then we have asset appreciation, which is also nice. And you go on and go on and go on. So if you want to buy $100 million real estate, you're going to need $30 million in cash. You want $100 million worth of euro dollar? I only need 1 million. So whatever. All right. So what day is it? It's a Friday. It's 10:30. So I think I'm going to pull the plug because I haven't been sleeping much and I can just feel like I'm losing it here. So anyways, amazing, right? The last 2 weeks, my message is back off, dude. Back off. Get ready. Get ready for the giant sucking sound. And I look at even our beautiful Aussie yen, and we haven't done anything for 2 weeks. But you knew here that would happen. You knew here that would happen. You knew here. I said, hurry up. It's going to come in hot and fast. Then there's going to be the big profit taking. And then the giant sucking sound of summer. And we got all 3 of those. So I want you to understand the humanity behind the numbers. Okay? It'll help you, especially through these long periods of less than desired. But you'll see this consolidation will probably break out, hopefully next week, but it might be 3 weeks from now. But this will move out to a new period of down and some increased movement. And then it'll quiet up again, and then there'll be some more movement. And then we'll just tiptoe into fall. So we're just starting Q3 to, Monday or something, isn't it? Right? So we're starting, right? We're starting Q3 soon. And we need to manage it with conservative expectations, which means if you have those expectations set in your mind, you will prepare your trades and your risk management techniques appropriately. If you're expecting July to be like May, you're going to have the wrong expectations and you're going to put in the wrong trades, and you're not going to manage the risk appropriately. So don't fight it. Okay? Don't fight the situation, but be aware of the reality, and then look at what you're doing as not as an issue for today. Okay? If you were managing like in venture capital, a micro fund is $100 million. It's barely enough money to even run a venture capital firm. So if you are managing a tiny little $100 million fund, you're not worried about how much money you're going to make today or how much money your portfolio companies are going to make today if you're a VC. It's a longer game, isn't it? And you should be thinking, really, between now and the end of the year, what are you going to do to keep the profits you've made, and then align your investment strategies with true market conditions, and how can you be prepared for volatility to come back in the market? And then we're already actually kind of thinking about 2021 a little bit, right? And more positive GDP, and a president in the in the White House will know who it is and what their policies are likely to be, right? So 2020, right? So look at this bigger than whether you can scalp 18 pips by the end of the day. Okay. Right now, the stock market is down almost 2%. The S&P 500 is now down almost 2%. In that scenario, I typically buy yen, and I typically buy dollar, and I typically buy Swiss franc. So do what you want to do with that alpha. Okay. And some short-term down makes sense to me with the price discovery. I would only be concerned if Delta Airlines drops below 20, or if Carnival Cruises is back at $6, or if MGM Grand is back below 10, because that means we've done a full-on reversion, but I don't anticipate or expect that in the moment. So let it fall. Let it have a bad week. Let it have a bad week, because that will be a better opportunity for me as a bull. And the bears need their turns. But if I think the stock market is going to be supported by the government and by the central bank, then cool. I just have to find the right time and the right price to enter. And that's just simple technical analysis. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. And please enjoy the IMF report.